Thank you very much for joining us once again. Welcome back. As you know that we're discussing today the impact of corporate tax on the real estate sector in the UAE. Whatever we have discussed till now, we have discussed in our last 30 webinars. We discussed almost everything. Now we are drilling it further down and we are looking into the aspects of the corporate tax in further detail. In our previous webinar, which was interest is allowed to calculate taxable income, we had a webinar and unfortunately it was not streamlined on the social media, but we had a webinar. The people who are usually joining us on the Zoom definitely do in a position to attend the webinar, but the person who are joining LinkedIn, Facebook, or other social media platform, apologies to them that they were not able to enjoy, they were not able to attend the webinar, but there's some sort of glitch in the system was now we're not able to broadcast it on the social media platforms. So what we are planning to have one more webinar on the interest, which is a very important topic. Almost every business in the UAE, they have a loan from the related parties, from the banks. Interest is the key element over there. So we'll be having one more webinar, or we will be relying on the recording, whatever we have for previous webinars. We'll come up with the plan very soon regarding this. So whatever we have discussed, these are the 30 webinars, and we are discussing today application of corporate tax on the real estate sector in the UAE. There are different players in the real estate sectors. The owners are there, developers are there, contractors are there, subcontractors are there, and brokers are there as well. Might be a lot of other big partners in the game as well. So these are the key players. Like owner, they have a plot of land. This plot of land is being developed by the developer. Once this is being developed by the developer, then developer is selling this, and before the selling, when a developer is developing, developer are hiring contractors who are hiring subcontractors, and then whenever these are being sold, different brokers and different other parties will involve in the game as well. So the key thing is there's a plot of land. This plot of land is being owned. So this plot of land is being owned by the owner. This plot of land is being developed by the developer. Developer is hiring contractor is hiring subcontractor, and then all are working for the development. Once these are being developed, these are being sold. Broker will involve, and broker will help to sell into the market. So what will be the taxability? This is the important thing. What will the implications of corporate tax on the owner, implications of the corporate tax on the developers, contractors, subcontractors, brokers? So what will be the impact of corporate tax? Just for your information, in the corporate tax law is not asking developer, real estate, brokers, residential property, commercial property. Only in the qualifying free zone person, there is a special privilege to the qualifying free zone persons. If they have any transaction related to the commercial property that is being used for business purposes, and the property is not being used for residential and accommodation purposes, this is the only privilege where the property can be 0%. Otherwise, law is thoroughly silent about the real estate. Law is thoroughly silent about the residential property, commercial property. Law is using the word resident person, non-resident persons. If the persons are resident person, then the qualifying free zone person, non-qualifying free zone person, natural persons. Law is discussing about this. So we need to understand these developers, contractors, subcontractors, brokers, these are the resident person, these are the non-resident person. What is their status? Based upon their status, we will be able to assess their taxability. If I'm asking at what will be the status, what can be the status of the developer, contractors, subcontractors, brokers, owners? These can be resident person. There is a possibility. We know what is the definition of resident person. Resident person means these are the Persons, the resident person can be of two types. It's a natural resident person, juridical person. Juridical person, we know this limited liability companies, partnership, legally structured partnership, LLCs, and along with this public joint stock companies. These are the different types of resident players. Resident can be a juridical person, or natural person, sole establishment, unincorporated partnership, freelancers. These resident persons, these can be resident persons of the UAE. This is whole UAE. I have split this UAE into the area. This is the mainland. This is the free zone. So this resident person can be UAE mainland resident, or it can be free zone resident. If the taxable persons are free zone resident, then if they are juridical person, they can become a qualifying free zone person, or they can become a non-qualifying free zone person. And if these are not the persons, the players I will discuss, contractors, subcontractors, developers, brokers, if these parties are not UAE resident, then we need to look if they're non-resident. If they are non-resident, means these will be the player. These are not being controlled and managed from the UAE. They don't have any fixed establishment in the UAE. They don't have any business in the UAE. These will be non-resident. That we already discussed everything in detail in the past. Who will be the resident? Who will be the non-resident? Natural person, resident, juridical persons. What will be the income subject to tax? Exactly based upon the same parameters, we can classify and we can assess what will be the status of the contractor, developer, subcontractor, brokers, owners. So these can be all these parties. These can be resident persons, qualifying free zone person, natural persons, juridical persons, non-resident persons, might be out of the scope as well. So based upon this, we will assess their taxability as well. So what is the qualifying free zone person? If they are the qualifying free zone person, if this juridical person is registered within the free zone, that person is called qualifying free zone person, and the person must be meeting these six conditions. If the person is meeting these six conditions, then we can say the person is a qualifying free zone person. If the person is not meeting these six conditions, we can say person is not a qualifying free zone person. The qualifying income of the qualifying person, free zone person, qualifying income of the qualifying free zone person is 0%, and non-qualifying income is subject to tax at 9%. These six conditions for a free zone person, this free zone person will be a juridical person. We have already discussed. Natural person sitting in the free zone, doing business in the free zone, cannot become a qualifying free zone person. Only juridical person can become a qualifying free zone person. These are the six conditions for the juridical person. Sorry, these are the six conditions for a juridical person to be classified as a qualifying free zone person. These six conditions under qualifying income, maintain adequate substance in the UAE, satisfy the de minimis criteria, comply with the transfer pricing rules and documentations, and they are preparing the audited financial statement as well. So if the natural person, either the natural person is within the free zone, either the natural person is out of the free zone on the UAE mainland, either the natural person is out of the UAE. If the natural person is doing business within the UAE, then any income of the natural person related to that business is subject to tax. And any income not related to that business is not subject to tax in the UAE. And these businesses can be in the form of vocational, commercial, industrial, professional activities. Interest and other income earned by an individual, it will not be subject to corporate tax because they are not required any license to perform these activities. So interest and any other income earned by the individual, it will not be considered business income. In the same way, dividend, capital gain, the other income earned by individuals from the shares and securities in their personal capacity, it will not be subject to corporate tax because you are individuals are not natural persons, are not liable to hold the license to earn any dividend, capital gain, and any other income earned by the individuals. Personal investment, like investment in the real estate, personal investment, it will not be subject to corporate tax as well because these activities you can perform without having any license. Real estate investment undertaken by the individual in relation to direct or indirect, like if the individuals has multiple properties They have property 1, property 2, property 3, property 4, 5, 6, 7. This individual sitting at the top, individual has investment in multiple property. The individual is not liable, not required as per the UAE law to have any license to perform these activities. Then it will be assumed, it will be considered that the individual is not in the business. This is his personal investment. It will not be subject to corporate tax. Then unique treatment for the natural person if the individual is doing the business. Now, initially we have discussed individual is not doing the business. We have discussed the various scenarios where the individual is not doing any business. Now, if the individual is doing any business, then there is a unique treatment. When the natural person will be doing the business, because they will be required to have a license to perform those activities. They will be legally structured as a like sole establishment. They will be required to get a license to perform these activities. Then if the individual natural person sole establishment, they are required to have the license to perform these activities, then and they are doing the same activity on regular basis, then we will say the individual is doing the business. We have already discussed if the natural person gross threshold is up to 1 million, they are not liable to subject to corporate tax. They are even not liable to get themselves registered for the corporate tax. This individual can be contractor, it can be developer, it can be subcontractor, it can be broker as well, because these all depend upon the legal structure. So if the individuals are doing any of these activities related to the real estate, developer, contractor, subcontractor, by getting a sole establishment license, civil company license, and their income is not more than 1 million, then they are not liable to register. They are not liable to corporate tax. But if these individuals who are the resident persons, and these individuals earning income in between 1 million to 3 million during the period, then law allows them to go for a small business relief. They can opt for the small business relief up to 31st December 2026. But they need to opt it. If they're not opting, they will be subject to corporate tax. In the same way, if their income of the contractor, subcontractor, brokers, owner, whatever is, they are either earning income more than 3 million during the tax period, they are liable to register, they are liable to submit the tax return as well. And their taxable income up to 375,000, it will 0% corporate tax. Any income beyond 375,000, it will be subject to tax at 9%. We have discussed individuals. These are the resident individuals. These individuals are based within the, they are doing the business. It doesn't matter wherever they are in the world, they are doing the business in the UAE. These are the natural persons. Natural person 1 million, not subject to corporate tax. Up to 1 million and 3 million natural resident persons, they can opt for the small business relief. If the income is more than 3 million, they will be subject to corporate tax. Natural persons which are doing business in the UAE, they can opt for small business relief. This is an important one. Now, there is a possibility that the businesses, the individual, they are segregating the business just to keep themselves below 3 million or just to keep themselves below 1 million. One person A, this person has a company, multiple companies, then they are segregating with keeping business less than 3 million or less than 1 million, less than 3 million, less than 3 million. This individual company, this individual here, they can opt for small business relief. They can think this, sorry, here they can say they are not subject to corporate tax earning less than 1 million. Here they can say less than 3 million. They can opt for small business relief. First of all, whenever the law is putting the limits of 1 million, law says income from all businesses. So if they are segregating 1 million, 3 million, 3 million, 3 million, first of all, whenever this will be aggregating, it will go more than 1 million. So first, they will not be in a position to keep themselves out of the corporate tax based upon the 1 million threshold. Second important thing, if they are segregating and keeping the revenue tax revenue, sorry, in keeping the tax income less than 3 million during the tax period, to opt for the small business leave by the end of till the end of December 31st, 2026, on or before tax year ending on or before December 31st, 2026, then the law says might be tax authority will say this is a fragmentation of the businesses. Business has been intentionally fragmented to keep the turnover of the business less than 3 million to avoid tax till the end of December 31st, 2026, then they will perform the test. How they will perform the test? They will see the same office, same owners, same activity, and same text, same finance department, assume same IT department, resources are common, office is common, function is integrated. Then how can you segregate the business? You cannot segregate the business. Yes, if there are two different types of businesses, they are not related, not connected businesses, then you can segregate, this is for sure. But if the business are related to integrated, very closely integrated, it will be straightforward considered this is a fragmentation, and tax authorities will not allow such fragmentations, and they will say to consolidate and apply the tax collectively. I just wanted to give you an example. If they are using the, suppose I am providing tax consultant services, accounting services, okay, I'm fragmenting, asking, okay, tax consultancy, separate company, accounting, separate company, same office is there, and the same resources are there who are serving the clients. Nobody will allow me to go for a fragmentation. So this is one of the example. Basically, FTA will not allow the fragmentation. They will look into the financial factors, economic factor, regulatory factors, all these factors they will consider. They will consider the resources, office, employees, who is a point of contact with the client. If there's a one business development manager and one development manager is dealing with all clients who are different businesses, how can we say this is a fragmentation? This is not a fragmentation. If one execution team is there, this execution team is serving all the client, but whenever we are booking the revenue, we're booking revenue separately, A, B, C, D. No, nobody will allow the fragmentation. So this fragmentation is not allowed for tax purposes. If you are thinking that you will be able to fragment it and bring the revenue below threshold of 3 million, and you will be able to enjoy the small business leave till the end of 31st December 2026. This is not possible. Just need to think that fragmentation authorities will not allow. So whatever we have discussed, we'll discuss till now. We'll discuss qualifying free zone person. What are the conditions for the qualifying free zone person? Natural person taxability we have discussed. Then we'll discuss if the natural person has less than 1 million, 1 to 3 million, and more than 3 million. Now the qualifying free zone person, some income of the qualifying free zone person we have already discussed in our in our free zone business seminar, basically when we conducted the seminars on the free zone, we have discussed in detail that some income will be considered qualifying income, and this income will not be subject to corporate tax if this income is being earned by the qualifying free zone person. What are those income? Income derived from the transaction with other free zone persons, unless and until these are excluded activities. Income earned from the non-free zone person, qualifying non-free zone person, unless these are excluded activities, and the income which is meeting a de minimis criteria. So these were the qualifying income. These income will be subject to tax at 0%. And if this threshold, if this criteria of de minimis criteria is being burst, then the person will not be able to enjoy the small business relief for the current year, from the current tax period and the subsequent 4 tax period that we've already discussed in detail. Now the qualifying free zone person, taxability of the qualifying free zone person, as I mentioned, the qualifying free zone person will be enjoying qualifying income, will be non-qualifying income. And keep in mind, this qualifying free zone person can be a contractor. I have discussed in the very beginning. It can be subcontractor, it can be developer, or it can be broker. As I mentioned in the very beginning, law is not asking specifically for the contractor taxability, subcontractor taxability, broker taxability. Law is asking juridical person, resident, non-resident, natural persons, non-resident persons. All these things we need to infer, we need to assess, we need to conclude based upon this criteria. So if the contractor, if the broker, if the qualifying free zone person might be there earning the qualifying income based upon the criteria that we discussed on the previous page, might be there earning non-qualifying income. What is qualifying income? The criteria, 3 things, the qualifying income. Other than this income, it will be considered non-qualifying income, and non-qualifying income will be subject to tax at 9%. These are the qualifying activities, but law says it must not be excluded activities. So these are the qualifying activities. None of the activity is a qualifying activity for the real estate business. Because in the qualifying activity, this is a manufacturing, processing of goods and material, holding of share and other securities, the ownership, management, operation of ships. So basically, these are ships, these are the manufacturing, these first two are the pretend manufacturing, ships, holding securities, insurance services, reinsurance services, fund management services, wealth management services, related party transactions, financing related party transaction, distribution, logistics services, any ancillary services. None of these services specifically pertaining to the real estate business. So we are just keeping in mind, if any contractor, any subcontractor, any broker, any developer is a qualifying free zone person, that qualifying free zone broker, developer, contractor, subcontractor cannot earn income from the non-free zone person, which will be a qualifying income. Just keep in mind. So these are the excluded activities. Specifically in the excluded activities, they mentioned banking, insurance, leasing activity, and ownership and exploitation of immovable property is also excluded activity. And it doesn't matter where this immovable property is. Other than one exception is there, other than commercial property located in the free zone, where the transaction in respect of such commercial conducted with other free zone person. So we can say, as I discussed in the very beginning, if the developer, if the contractor, subcontractor, or the broker, which is the qualifying free zone person, there is only one stream where such contractor, broker, developer, subcontractor, they can earn qualifying income, and that is related to commercial, related to real estate property, and that is commercial property located within the free zone. Transaction is being made with other free zone. That property is being used for commercial purposes. That property has never or not being used for residential or accommodation purpose. There is only one leg. Other than this, ownership and exploitation of the immovable property is excluded activities. It will be subject to corporate tax straightforward. We'll discuss in detail. Then ownership and exploitation of intellectual property and any ancillary activity. Just keep in mind, one stream is there. This stream is there where there is a possibility of qualifying income for the contractor, subcontractor, broker, developer. Exceptions to this is a general principle. This was the general principle what we have discussed. General principle was qualifying free zone person. 3 incomes are qualifying income. Other than this it will be considered non-qualifying income. It will be subject to tax. And out of these 3 income, there one if the income is generated from the other free zone person, first. Second, if the income is generated but not excluded activities. Second, income is generated from the qualifying activities from the non-free zone person, which are not excluded activities. Third, the de minimis criteria, where the income is below the de minimis criteria. These 3 conditions are the 3 possibility of the qualifying income. Then all other income other than this will be considered non-qualifying income. But they have given a special treatment, special rules for the immovable property. Any immovable property, either the property is on the UAE mainland, out of the UAE, it will be straightforward, subject to tax at 9%. If the property is within the free zone, residential property, straightforward, subject to tax 9%. Commercial property, all these conditions, whatever we have discussed, transaction with other free zone person, being used for business purposes and not being used for residential accommodation purposes, then this property is called immovable property, immovable commercial property, that will be subject to tax at 0%. This is a general principle, but there are some exceptions. What are the exceptions? Exceptions are if the qualifying free zone person is earning any income from the PE, domestic PE. There is a one company, qualifying free zone person. This is a free zone one company. This is a qualifying free zone person. This company has a branch on the UAE mainland. From the branch, they are generating any income. Any income generated from that branch will become a domestic PE. It will be straightforward, subject to tax at 9%. And even if this company has a branch out of the UAE, somewhere in KSA, Egypt, anywhere across the globe, branch, this will become a PE, and this will be called foreign PE. Income will be subject to tax straightforward 9%. And if they have any immovable property, we just discussed, any immovable property out of the free zone, straightforward, subject to tax 9%. Any residential property within the free zone, straightforward, subject to tax 9%, except one stream which will be zero, which can be zero rated. Other than this, every income will be subject to tax at 9%. And the important thing, these four transactions, it will not have any impact on the de minimis. It will not burst de minimis threshold. De minimis threshold is 5%, 5% or 5 million, whichever is lower. So there is one company, this company is in the qualifying free zone, and this company is earning an income, assume 10 million from their PE on the UAE mainland. This 10 million is greater than 5 million. This 5 million will not burst the de minimis criteria. It will not have any impact because de minimis 5% will be calculated. Basically, it will be non-qualifying income divided by total income. And this income from the PE, domestic PE, foreign PE, and any income from the commercial property, from the immovable property other than the qualifying immovable property, it will not be considered in the nominator and denominator. So it will not have an impact on the 5%. In the same way, this income which will be subject to tax straightforward 9%, it will not be included in the 5 million which is required for to bust the de minimis criteria. So this is the important thing just you need to keep in mind. So these three income, as we discussed in the previous page, income from the PE, domestic PE, foreign PE, income from export immovable residential property, income from the export immovable commercial property, where the commercial property is not subject to tax at 0%. So we have classified residential property straightforward 9%, commercial, if this is not qualifying, straightforward 9%. These properties, PE income, straightforward will be subject to tax at 9%, and it will not have any impact on the de minimis. So this is one ministerial decision on this specifically. This ministerial decision stipulates that the ownership and exploitation of immovable property is an excluded activity. We have discussed already now. Whenever we're discussing the excluding activity, the ownership and exploitation of immovable property is excluded activity, means there is no possibility to generate 0% qualifying income from the ownership and exploitation of immovable property except one. So this is the same thing I'm just highlighted there. But this generally is subject to one exception. Exception that I've already discussed in detail. If all these conditions are being fulfilled, the note important, ownership, exploitation, commercial property in a free zone, involving transaction with other free zone person is not considered an excluded activity and will generate qualifying income. How they have defined the commercial property in the related decision? The commercial property is considered the immovable property or part thereof used exclusively for business or business purposes. Used exclusively for business and business activity purposes. Immovable property or part thereof used exclusively for business or business activity purposes, or properties used as a residence. This doesn't include the use as a residence. I have basically some question related to this clause. Not say question, we need some more clarification. Important thing is, my reservations are this property which is subject to tax. They're asking, this is excluded activity, specifically commercial property. There's a used property. So I am just presuming they want developer, or developer is based in the qualifying free zone person. This is jobs are based developer. Okay, let me go through this slide and we'll discuss at the end. The important thing I wanted to speak to you regarding this, we will discuss in our last slide. Why I have the reservation regarding this, but for the time being, you can keep in mind commercial property. What is the commercial property? Then that can be 0% qualifying income. What is this? Is used exclusively for business purposes, not used as a residence or accommodation purposes like hotels, motels, bed, all these. It means if the hotel is if the qualifying free zone persons is selling any hotel within the free zone, it will be subject to tax. Income will be subject to tax straightforward at 5%. So any income from the leasing of the hotel, this income attributable to the immovable property, it will be straightforward subject to tax at 9%. Leasing is qualifying, leasing is excluded activities, but leasing of the commercial property, important thing, going back here, leasing, this leasing is excluded activities. Straightforward, you cannot enjoy 0% corporate tax relief. But leasing of the commercial property is the qualifying activity. Subject to the condition, commercial property is not being used for residential and commercial residential purposes, but it is being used for business purposes, and transaction is being made with other foreign person. So leasing itself is excluded activities. Leasing of the commercial property, if all these conditions are being fulfilled, it will be qualifying activity. It can generate 0% qualifying income. So in the same way, this is used for business or business activity, not used for residence or accommodation purpose. This is the definition of commercial property. Law is silent about the exploitation of property. If you can go back, you can see the word here. Number 4, they are asking ownership and exploitation of immovable property. Ownership and exploitation of the immovable property. Now, my question is, what is exploitation of immovable property? Law is completely silent about the exploitation of the immovable property. So, is this include broker services? Is this include development services? Is this include contracting services? Is this include subcontracting services, leasing services? So, I have taken this somehow. I believe I have done some sort of research. The exploitation of property includes generally leasing property for economic benefit. The law doesn't explicitly define exploitation of the property. It is generally understood as the using property for the economic benefit. The various activities like property rentals, resource extraction and commercial use, exploitation of property also include development of the property. Development, leasing, using property for the economic benefit, we can assume this is called the exploitation of the property. So now these questions are basically, if we have important thing is, this is a qualifying foreign person. This is the developer. This developer is a qualifying foreign person, assuming the developer is based within Jabza. Once this developer is based within Jabza, a developer is providing the business development services. They are providing development services. This developer is developing in this tower, in the Jabza. This tower, and then contractor will be apply on this, subcontractor will come, broker will come to sell it. This tower has been built up. Now this tower which has been built up, units are being sold to the other foreign person. So developer within the designated zone, developer is a qualifying free zone. Sorry, developer is within the free zone. Developer is a qualifying free zone person. Developer is meeting the all criteria. Developer has built up one tower, developed one tower within the designated zone. Contractor was applied, subcontractor was applied, broker was applied. Now this developer is selling the units. These units are being sold to the free zone person. And this tower, I'm assuming this is a commercial tower, no residential tower. If residential, straightforward 9%, we have already agreed. Now this tower which has been built up, this tower is being sold to other free zone person. It will not be used for living or accommodation purposes. So will this sale be considered the qualifying income of the developer or not? This is my first question. Basically, law says immovable property, used property. This tower is a new tower. This tower has not been used till now. If the law would have been asking will be used, then I can understand, okay, this will be used for commercial purposes, which will not be for residential purposes. I can say it will be a qualifying income. Law is using the word used. Can I go back to the definition of commercial property given in the decision? This is used exclusively for business or business activity purposes. Exclude property is used as a residence or accommodation. So apparently it seems like this, when this tower has been built up by the qualifying free zone person, tower is being sold to other free zone person. Tower will not be used for living or accommodation purposes. This is a commercial tower, exactly based upon the wording of the law. Apparently, it seems like it will not be considered as a qualifying income. The reason is this is not a used tower. Second question. Law says, again, going back to the definition of commercial property. Law says immovable property used exclusively for business and business activity purposes. So now the second question is, this tower has not been used for business purposes. The units of this tower are the inventory for the developer, might be for the owner. It all depends on the contract between the parties. The units of this tower is the inventory for the qualifying for region person, which is a developer. So these units will be considered commercial use or not. I believe it will not, but I'll try to explore this in our coming article, in our coming webinar. So first question was, when this tower is being sold, this is not a used tower, will it qualify for the commercial immovable property? First question. Second question, this tower is containing multiple units, many units. These many units, will it be considered used for the developer, or it will be considered inventory for the developer? This is the second question. Third question is exploitation of the property. Income attributable to this tower. Now developer, this contractor, assuming contractor is the qualifying free zone person. Qualifying free zone person. This contractor, which is based in the, assuming again in the free zone person. This contractor is the qualifying free zone person. This contractor is earning income related to this tower, because they built up the tower. Once they build up the tower, they will be issuing an invoice in the name of the quadr free zone person, which is also a developer. So will the income of the contractor, will the income of the subcontractor be considered as a qualifying income if it pertains to a commercial tower, the tower that is being used for commercial purposes, not for residential purposes? Tower is within the free zone. Invoice is being issued in the name of other free zone person. So law is asking, this is excluded activities, leasing, any, if we're going back, see, ownership and exploitation of immovable property. Exploitation of immovable property is excluded activities. If this is excluded activities and this contractor, this subcontractor is giving services to other free zone person, and they are attributing, they are generating the income related to this immovable property within the free zone, will it be considered qualifying income, or will it be fall under the definition of excluded activities? Again, these are the three questions I have written in my article as well. These three questions we will try to explore in our coming article. And we will see, will it be subject to corporate tax or will it not be subject to corporate tax? Taxation of non-resident, there is a possibility that non-resident developer is there, non-resident contractor is there, non-resident subcontractor or broker is there. We need to stick to the basics, and basics are PEE of the non-resident will be subject to corporate tax to their income related to the UE sourced income. The important thing is non-resident person, they will not be able to enjoy the small business relief. It has been given in the very latest guide issued by the FT on the non-resident person. So I'm repeating, non-resident person will not be able to enjoy small business relief. Any income of the non-resident person, if assuming UK company, this UK company has any PE in the UAE, this PE will not be able to enjoy small business relief. So this PE will not be able to, the non-resident person will not be able to enjoy small business relief. And there is a no PE, then UE source income will be subject to corporate tax. If they have nexus in the UE, any non-resident company, this nexus in the UE, by the possibility, the nexus investment, it will be individual or juridical person. If any individual, British national, American national, US national, sorry, Australian national, Pakistani, Indian national, ABCD, Egyptian national, Saudi Arabian national, whoever is, if they have any investment in the property within the UE, from there they are getting income, that income will not be subject to corporate tax. We have already discussed in detail. And if this person have, there is a company, this company has investment in the real estate, immovable property within the UAE, that company will be liable to register for corporate tax purpose in the UAE. That property will be subject to corporate tax, and it will be 0% or 300 up to 375,000. 0% beyond that, it will be considered straightforward, same like a juridical person, juridical resident person. So this we'll discuss in detail. Okay, this is the summary, basically impact of corporate tax. Whatever we have discussed till now, I'll just summarize it for you. This is very straightforward thing. So if this is a mainland developer, owner, or contractor, this is a mainland developer, owner, or contractor working as a natural person, working as a juridical person. If they're working natural person, civil company, sole establishment, freelancer, unincorporated partnership, it doesn't matter. They are in the free zone, out of the free zone, anywhere across the globe. Important thing is, are they doing any business in the UAE or not? If they are doing business, they will be considered resident purposes. Value of the business is, value of the gross income is up to 1 million, not liable to register, no corporate tax. 1 to 3 million, up to 3 million, liable to register and submit the return, but can call exemption up to 31st December 2026. Beyond this, then they will be liable to register and submit the return. Up to 375,000 taxable profit, 0%, beyond that 9%. We have already discussed, and these parties, as I discussed, can be contractor, subcontractor, developer, brokers as well. But if they are operating as a resident juridical person, the annual business income up to, now the resident, I have not been, like I have mentioned, there are 3 legs, 1, 2, 3 for the natural person. There is a 2, sorry, 1 and 2 for the juridical person. So 1 million, this not available to the juridical person. 1 million relief is not available to the juridical person. So juridical person only 2 legs, up to 3 million, more than 3 million. Up to 3 million, they can opt for the small business relief. More than 3 million, then we need to look at this resident juridical person, non-resident juridical person. If the resident juridical person, mainland out of the, when the resident juridical persons, then up to 375,000, more than 300, 0%, beyond that it will be 9%. Keep in mind, I have not included here the qualifying free zone person. We are discussing here mainland developer, owner and contractor. Mainland developer, owners and contractor, they cannot be qualifying free zone person, because for the qualifying free zone person, the entity must be established within the free zone. It should not be a natural person. That I will discuss in our next slide. So it is a non-resident juridical person. Non-resident can be PE, it can be UE sourced income, it can be nexus. Just I have discussed in our previous slides, it will be 100% like a juridical person, but this PE of the non-resident person cannot opt for the small business relief, as I mentioned here. UE sourced income will be subject to tax, 0% withholding tax, and they will not be liable to register in the UAE. Any contractor, any UK-based broker is selling any property within the UAE, any UK-based, I'm just giving you, any UK-based broker is selling any property within the UAE, it will be considered UAE sourced income, and 0% withholding tax will be applicable. If this is there no PE, we'll discuss sometime PE in detail. They've issued very recently guide on the PE as well. In our very recent next articles, we'll try to explore PE in detail. This is very, very, very important concept. Next is in the UE source income. The next is through the, again, this will natural person, there are no nexus. I have natural person, I have not in this. Next is only for the juridical person. If juridical person nexus, so in this case, they will be liable to register. Importantly, this is very, very comprehensive slide. I have prepared it with very, very due care. It will give you thorough visibility of the applications of the corporate tax on the various players of the market. Now this is a free zone person. In the previous slide, we discussed a mainland party. Now this is the free zone person. This is a free zone person, non-qualifying free zone person, qualifying free zone person. Non-qualifying free zone person, it will be 100% treated like a mainland real estate party. So it will be treated, it can be, again, coming back, it can be, if this is a non-qualifying free zone person, non-qualifying free zone person can be natural person, it can be a natural person, it can be a non-qualifying free zone person. Natural person will fall under this category, non-qualifying 100% will be treated like we discussed in our previous slide. But if this is a qualifying free zone person, property is located within the free zone, property is located out of the free zone. If the property is located out of the free zone, we have discussed 3 exceptions, which will be straightforward, subject to tax at 9%. And this is one of the exceptions. If the property is located out of the free zone, straightforward 9%, it doesn't matter. This is a commercial property. It doesn't matter. This is the residential property, straightforward, subject to tax at 9%. If this property is within the free zone, then we need to look into this. If this is a commercial property or this is a residential property, or commercial property that is being used for living purposes, both will fall under this category. It will be straightforward subject to tax 9%. It will not bust the de minimis criteria as we discussed. Then if this is a commercial property is located within the free zone. Next question we need to look into is, are we transacting with the free zone person? Is the qualifying free zone person having any transaction with the other free zone person? If other free zone person, qualifying income 0%. If this is a qualifying free zone person, property is in the free zone, property is used being commercial properties, but the person is dealing a transaction with the non-free zone person, it will fall under non-qualifying and straightforward 9% corporate tax. This property based discussion, whatever the slide that I prepared, basically I had 3 questions I have discussed, 3 of the reservations that we'll try to explore in our coming articles. I have prepared this slide exactly for those 3 questions that we have already discussed in detail. These 3 questions are: new development by the developer, will it be considered inventory or business use? Second, new development fall under the use or it will be straightforward subject to tax at 9%. Third, exploitation of the property, income attributed to the commercial property earned by the contractor, subcontractor, which will be falling under the excluded activities, or it will be considered qualifying income. We'll discuss all this in our coming webinar and we'll try to explore in our coming article. How can we help? We can help you for the impact assessment, implementation, and advisory services. You can contact me, you can contact my team. We are always there. We are ready to listen, ready to understand, ready to deliver. You are most welcome. You can call us 3391488. You can drop an email info@crestcooper.com. You can visit our website, our latest article. We are in the planning. We are in the process to upload all the articles on the website. You will be able to see all the article on our website and the latest lectures, webinars, we are uploading on our YouTube channel. You can find all these on the related YouTube channel as well. Thank you very much. I think I have taken your lot of time today. This is 12:47. Usually we are finishing 12:30, 35. I think it was very comprehensive session related to the property, and I was thinking to get some more time. Apologies for this. We have 10 to 12 minutes. If you have any questions, I'm happy to address the question. Okay. First question is, we are using term revenue and income for small business relief. This is revenue limit is 1 to 3 million, not income, correct? Yeah, this is revenue limit, is not income limit, the revenue cross revenue. Second, a UAE national owner of 1,000 commercial and residential units in the mainland earning rental income. Whether this rental income is subject to CT? No, this is not subject to corporate tax, because we've already discussed, if the UAE national owner having investment in the commercial or residential property, he is not liable, he or she is not liable to have any trade license to perform these activities. So it will not fall, it will not be considered that the UAE owner is doing any business. It will be considered his or her personal investment. It will not be subject to corporate tax. Asif is asking, a person having a building in mainland under his name. Building in mainland under his name, okay, without the trade license and renting out the flats and shops, is he liable to pay corporate tax? No, because this is personal investment. He is giving it on lease. This doesn't require the commercial license. It will not be subject to corporate tax. Also, he will be registered in the city. No, he will not be liable to register. Third, he is partner of any other business in the UAE. He is a resident himself. If he is a partner in any other business, that business income depends upon the nature of business. If he is a partner and status of the business, if the business status is LLC, the income in the hands of the individual will not be subject to corporate tax. If the status of the business is sole proprietor, civil company, unincorporated partnership, then income will be subject to tax in the hands of the individual, and that individual will be liable to register for corporate tax purposes. Any other question? No? Okay, one more question. A freedom company having service activities, can he get benefit 0 rate? Service, it all depends upon the nature of services. Some services are excluded activities, some services are qualifying activities. So it all depends upon the nature of services. To whom these are providing, again, this is important. what type of services, to whom these services are being provided. We know this, any qualifying free zone person providing services to the natural person, it will be subject to corporate tax because these are excluded activities. But if these services are being provided, fund management services, wealth management services, I think these are two more services as well related to the ship and operation of the two more services as well. These four services actually and of the services provided to natural person. So it all depends upon the nature of services. It all depends upon the party to whom these services are being provided. It all depends upon the status of the person who is providing the services as well. Then we would be in a better position to assess it will be a qualifying income and non-qualifying income. Without considering all these factors, it is very difficult for us to assess. It will generate qualifying income, it will generate non-qualifying income. Okay, guys, thank you very much. Lovely to be part of the discussion. Have a lovely day. Thank you and nice speaking to you. Take care. Thank you. Bye-bye.